this week got the crap beat out of me. Not too bad. We actually still ended the week up green, but I have a lot of unrealized losses that will probably be happening next week because I have a lot of puts open. But what we're going to talk about in this video is SPY, because I close out some losses on SPY puts. I want to talk about market structure. I want to talk about why I entered the position. And I want to more so go over why, even though I lost money on this trade, I would take this setup each and every single time. Just like we had one back here, I want to explain why you have to be okay with losing and why you have to take positions without expecting a return. It's extremely important. We're going to go over all that in this video. Now, when we're looking at any chart, we want to look at three things. We want to know, number one, what is the trend? The way that we dictate this is we zoom out on a massive time frame. We look at the weekly chart. We want to use the indicator that's called the market bias. We have a free course down below that you guys can take to learn all about it. We want to see, is price trading over the weekly market bias, which you can see price is. And in most cases, when price pulls back into the market bias, it's a great time to accumulate a long position before another continued rally. The next thing we want to do is look at our institutional buy zones. The way that we do this is by taking our Fibonacci from swing low to swing high. The 0.618 and the 0.786 is going to be called our institutional buy level. This is going to be when Wall Street is allowed to start accumulating in a bullish uptrend. You have to remember, if you're a hedge fund, you're not going to be buying at the top of the trend. You're going to wait for the trend to pull back, and you're going to accumulate at a much better time. Now, the secret sauce is this level, which I call the OTE, or the optimal trade entry, which is the 0.826. This is the smart money level. This, in most cases, is going to be the lowest that we go if trend is going to hold before we get a bounce. And this is where the real traders get in. You can see whoever hit that right within that smart level has actually made nearly an 8% return in 9 trading days, which wasn't me. Now, we expected and called out a bounce within this level, but what I was expecting was a push back up into this market bias, because we're looking to go on another one of these rallies, or we're looking for the market long term to break this level and start a massive downtrend, which I don't think is going to happen. But I did expect price to reject within this market bias level at about $540 to $544, and then reject back down to test 510, 520, and bounce one last time. Now, I'm still holding some of my SPY puts, because if we take a Fibonacci retracement on a shorter time scale, right, from this high down to this low, and we just isolate this level, you're going to notice what? That short-term market structure is still bearish. And the rules that apply down here also apply up here. Our institutional level, or where most people are looking to short the market, which is right where I was looking to short the market, is a little early at about $545 up to $555. The smart money time, the time to sniper short the market, would be right here today, the 16th, right between $553 and $555. I'm not saying that this is going to happen, but this would be your most opportune time to short the market, entering within that level, setting a stop loss at higher high, take profit all the way down at $510, giving you a 3.7 risk versus reward. This was my plan, and I am still holding on to most of my puts because we didn't close over this level. So next week, I will say that we're still showing a ton of strength on the BX trender. Bullish accumulation is still occurring. So next week, if price pushes right through that level, I'm going to close out my trade. But there's still a chance that we reject off of this and pull our way back. Now, the last thing I want to talk about is this weekly chart, because bullish accumulation is very strong on this time frame. You know that we are expecting a potential rejection, sort of what happened here last time on the S&P 500, where we bounced off of that level, rejected off of that golden zone, sold off again, sold off his third time, and then rallied. However, this time we bounced very quickly. So I wasn't expecting a quick bounce. I was expecting that further rejection into this level. But now that we've closed with a higher low on the BX trender, that is a very bullish sign that price could just really push its way back up to $580. So I am bullish from here on. I'm still holding my puts. We'll see how next week works out, especially when it comes to the weekly BX trender. And this type of market is usually something that's pretty tricky to trade until we get full bullish confirmation. If you guys want to learn how to trade this strategy, it's very, very simple. All you need is 30 minutes per day just to check the daily candles, and then 1 hour on a Sunday just to make your weekly watch list. Go and learn the strategy. It's completely for free. All of our courses are free. They're in the description. The market bias $600,000 strategy is the one where we go over the indicators. And if you want to trade with me each and every single day, get access to all my real-time trades, and most importantly, trade with a community. These guys and girls know exactly how I trade, what our strategy is, the entry and exit requirements, and we're all growing together. If you guys want to be a part of that, you can go ahead and check out the link in the description. I'll see you guys next time.